If BTC hits 60K, 50K, or even 40K, what would you actually do? Not what you hope you would do. Not what sounds smart online. What would you really do when the price is dropping, fear is everywhere, and your screen is bleeding red? Most people never think this through ahead of time. They wait until it happens. By then, emotions are already in control. Today, we are going to fix that. We are going to talk through clear plans, realistic scenarios, and how to size buys during fear so you are not guessing when it matters most. This topic matters right now because Bitcoin moves in cycles. Big moves never come with comfort. Every major opportunity feels scary in the moment. If you do not have a plan, volatility will make decisions for you. By the end of this video, you will have a simple framework to think clearly if BTC hits 60K, 50K, or 40K, and how Plan A versus Plan B keeps you grounded when emotions spike. Let's start with the biggest mistake investors make. They only plan for upside. They imagine gains, not drawdowns. When price drops fast, that fantasy collapses. Fear replaces logic. The goal here is to remove surprise. When price levels are expected, emotions lose power. Now let's walk through the first scenario. If BTC hits 60K, this level often feels uncomfortable, but not catastrophic. At 60K, most long-term investors are still in profit or near break-even. News sentiment turns cautious, but not extreme. This is where many people freeze. If BTC hits 60K, the key question is not, is Bitcoin dead? The real question is, does my original thesis still hold? If nothing has changed about why you invested, panic selling makes no sense. This level is often where smart money starts paying attention again. At 60K, Plan A usually stays active. Plan A means you stick to your original strategy. That could mean holding, small buys, or doing nothing. Doing nothing is a valid move. Not every dip requires action. This is where discipline matters more than bravery. Now let's talk about if BTC hits 50K. This is where fear gets louder. Headlines turn aggressive. Social media fills with doom posts. This level feels heavy because it confirms weakness. Many investors start questioning everything. If BTC hits 50K, this is where Plan B becomes important. Plan B exists for moments when emotion tries to hijack logic. Plan B does not mean panic selling. It means adjusting risk calmly. Plan A versus Plan B is simple. Plan A is your normal strategy. Plan B is your stress-tested response. At 50K, Plan B might mean scaling into positions instead of buying all at once. It might mean tightening exposure. It might mean waiting for confirmation instead of guessing bottoms. This is also where how to size buys during fear becomes critical. Fear makes people go all in or all out. Both are mistakes. Position size should shrink when uncertainty grows. Smaller buys reduce emotional pressure and allow flexibility. Instead of asking, "Is this the bottom?" ask, "Can I stay calm if price drops further?" If the answer is no, your size is too big. This rule saves people from emotional burnout. Now let's address the hardest scenario. If BTC hits 40K, this is where conviction gets tested. This is where weak hands fold and strong plans show their value. At 40K, sentiment often feels hopeless. People stop talking about opportunity and start talking about survival. If BTC hits 40K, you must slow down. Fast decisions here are dangerous. This level often comes with forced selling, liquidations, and extreme emotion. That does not mean instant recovery. It means volatility increases. Plan A versus Plan B matters more than ever here. Plan A may be paused. Plan B takes control. Plan B focuses on protection first, opportunity second. This could mean only buying if certain conditions are met. It could mean stepping back entirely. How to size buys during fear at 40K becomes about survival. Buying small keeps you mentally flexible. You can always add later. You cannot undo panic buys or panic sells. One mistake people make at this level is trying to prove conviction. Conviction does not mean recklessness. True conviction is patient. It waits for clarity. It accepts uncertainty without rushing. Let's talk about psychology for a moment. Fear feels urgent. It tells you something must be done now. Most of the time, that voice is wrong. Markets punish urgency. Calm thinking creates better outcomes. Another key point is time horizon. If your time horizon is long, short-term price levels matter less. If your time horizon is short, volatility becomes dangerous. Be honest about which one applies to you. Many people say they are long-term investors until price drops. Then they react like short-term traders. This mismatch causes stress. Aligning behavior with time horizon reduces mistakes. Now, let's bring this together. If BTC hits 60K, stay grounded. Revisit your thesis. If BTC hits 50K, activate Plan B and manage size. If BTC hits 40K, slow everything down and protect capital first. This framework removes guesswork. You are not reacting. You are executing. That is the difference between emotional investing and strategic investing. Let's also talk about what not to do. Do not anchor to past highs. Do not assume price owes you a bounce. Do not listen to the loudest voices online. Most of them disappear during deep drawdowns. Focus on what you can control. Position size, time horizon, emotional state. These matter more than predictions. Another important concept is flexibility. A plan is not a prison. If new information appears, adapt. Plan A versus Plan B is not about being right. It is about staying rational. How to size buys during fear is a skill. It improves with experience. The goal is not perfect timing. The goal is staying solvent and sane. Let me ask you a direct question. If BTC hits 50K tomorrow, do you know what you will do? If not, pause the video after this and write it down. Clarity reduces fear. Now let's talk about long-term perspective. Every major Bitcoin cycle included moments that felt unbearable. Each one looked obvious in hindsight. In the moment, they felt terrifying. This pattern repeats. The difference between those who survive and those who quit is preparation. They did not predict the future. They planned for uncertainty. If BTC hits 60K, 50K, or 40K, price alone should not dictate action. Your plan should. That is the entire point of this video. Before we wrap up, remember this. You do not need to catch every move. You do not need to be aggressive. You need to be consistent. Consistency beats intensity over time. Let's quickly recap. Think through scenarios before they happen. Use Plan A versus Plan B to separate calm thinking from stress responses. Learn how to size buys during fear so emotions do not control you. Bitcoin will keep moving. Volatility will return again and again. The only question is whether you will be reacting or responding. If this helped you think more clearly about what you would do if BTC hits 60K, 50K, or 40K, make sure to like the video. It helps the channel reach more people who need calm perspectives during volatile markets. Subscribe if you want more clear, grounded discussions about Bitcoin and investing without hype. And comment below. If Bitcoin drops hard this year, which level worries you the most? And what is your plan when it happens?